We have on board with us Dr. Gyanendra Shukla, MD and CEO of Rallis, to break down these numbers for us. A very good morning, Mr. Shukla. Thank you for joining us here on ET Now. You've clocked a record first quarter EBITDA performance with 18.1% margin this time around. And this was despite the driest 12 years June, as well as delayed sowing that we've seen in the past quarter. Can you tell us what really drove this performance to you? And given the strong start, are you now even more confident on margins for the full year compared to your earlier guidance of stable to soft quarter?
So thank you very much for having me on the call. I think our quarter one is really driven by strong performance in seed as well as domestic crop protection business. We had a combination of both volume as well as price growth. Now, as far as agriculture is concerned, I think agriculture is happening. It is the pace at which probably it matters. So from that perspective, I would say, look, we should. I mean, while there is a concern on agriculture, but at the same time, we also have to keep in mind that once farmers plant the crop, and if this concern on agriculture, low production continues, commodity prices will spike up, and that gives an opportunity for companies to continue to grow. So it's a mixed thing. I think it's very difficult to put a point on finger on the future. Rains have recovered. And from my experience, farmers never leave their fields fallow. So they will plant something, and depending on the crop and pest situation, they will use some product. It might be just shifting of numbers from quarter to quarter, but based on it's really driven by domestic performance and higher margins in our export business.
Understood. Dr. Shukla, hi, this is Nehi also joining in. You did speak of commodity prices and the inflation that we're seeing on that note between 15 and 25%. What is the company's plan and timeline to pass on these costs to the end user? What percentage of price hikes are you going to be taking, and how do you think that is going to be affecting your realizations?
Yeah, so I think cost is a real. As war has started, cost increase for every company is a real, and every company is trying to pass on price increase, but we have taken a more prudent approach. As we know, in the first quarter, our growth is a combination of price as well as volume. More volume, less price. The challenge in the market is when sentiments are not good, and somebody has already built the inventory for the season. We are a very seasonal business, so we have to make sure our volumes are going in the marketplace. You remain the preferred brand. You take a lot of market actions related to promotion, watching the inventory in the areas where there's a demand, being very, very efficient in the marketplace, running various schemes so that you get prioritization when product liquidation, as far as product liquidation is concerned.
All right, understood, sir. Now, I also want to talk about your seed business. So the seed business was impacted by delayed sowing as well as a lower cotton acreage, but you're still guiding for mid-teens growth for the full year FY27. Can you tell us how confident are you still about achieving that growth, especially if the monsoon continues to remain uneven?
Yeah, so cotton season is over in the country. We have better clarity on cotton. So cotton probably we see as a more flat business this year, because our focus was primarily North India business, and North India farmers have completely switched out from cotton to crops like rice, where they see more certainty. Even in southern and central part of the country, because cotton is primarily a rain-fed crop, some of the farmers have decided not to plant cotton. They have switched over to more pulses. And the third thing is that there has also been a lot of spread of illegal herbicide-tolerant cotton in the country, which is unapproved technology. As a result, cotton as such remains a very challenging crop in the current year. So our focus is really more on growing rice, maize, and millet business, and that has done well.
Understood. And, I just want to come back once again to that cost escalation question that we were talking about. The West Asian conflict is also cited to be another reason why your input costs are going up. Can you just help me understand what is the dependence or the exposure that your raw material basket has to that region?
So I think you have to understand, chemical industry is highly energy dependent, right? So everybody has significant level of dependence on For example, solvents. So they're all petroleum products. As crude price goes up, all the solvents. So every bottle of crop protection product sold in the country will have some energy and energy dependency, which is based on the petroleum product. As a result, it is all across. So even if something is domestically available, still it is linked to crude. So as a result, I think this is a common theme for everybody. Anybody who's in the agrochemical business will have to pay this price.
Right. Speaking about these global uncertainties, CSM volumes have actually started recovering for you in some products, which is even as global agrochemical pricing, especially coming in from China, remains under pressure. Can you tell us if is this recovery specific to a few certain products, or are you beginning to see a sign of a broader industry turnaround, perhaps?
So CSM, one cannot really generalize it. It depends on the product and relations you have got your partner. So one of the product we used to sell in America, it has come back in the demand that has done well. We have been able to renew some old contract, and also we have been able to realize higher price, based on the input cost. So it's a combination of things. What has gone down is what we call catalog products. So some of the low margin products we were sending to the overseas market in America, we have decided to prioritize domestic because export became a very uncertain business.
And exports, you've mentioned that. What's the outlook over there? Any timeline? I understand that there is no outlook when it comes to the way things are panning out geopolitically. But are you looking at diversifying your exports? Can you break down your export share for us geographically?
So export consists of primarily two baskets, what we call catalog product as well as CSM. Now, this year CSM product business has done better than the last year. I think the important thing is diversification in agriculture, because we have seen year on year. Last year, business was down in quarter 2 because of a lot of rain. This year, businesses are facing challenges because of less rain. So diversification in the product category domestically as well as export market. Export market in two ways. You keep launching a new product and keep adding new customers. We actually have been aggressively adding customers in the overseas market. Now we have deployed our people in the overseas market. In past, we managed this business, people traveling from India. Now we've started putting people in those markets on the top of to increase our outreach to the customer. And I think it's a combination of things. But these things we have to understand. They take time to evolve. I mean, these are the customers you don't acquire overnight. You keep building relationship, keep showcasing your capabilities, keep demonstrating your ability to produce high quality product at the competitive cost. So I think is a journey we are in, and we feel very positive about it. Every year we add new customers, and as we speak, in next 2 to 3 years, we'll be launching 4 new products, as some of our older product probably will be heading towards end of life cycle.
We'll be looking forward to those launches. Dr. Shukla, I just want to understand a little bit more on the margin outlook. This time, after seeing a little bit of a dip in the previous 2 quarters, your margins have once again reached 18%. How sustainable is this going ahead? Can you help us understand what the band could be for margins for the rest of the financial year?
So it's very, very difficult to say what will happen given the uncertainty. But agriculture is a what you call seasonal business. So you cannot equate first quarter number to apply all other quarters. So a lot will depend on how season unfolds, how pest and disease pressures unfold. But commodity prices are positive. When commodity prices are positive, some of the negative impact of less area get nullified. So we remain very optimistic, at this point of time, cautiously optimistic, I would say, because nobody knows. Rainfalls have recovered very well, and when there's an intermittent rain, it gives opportunity for farmers to go to the field and conduct operation, spray crop protection product to protect their crops. So I don't think I have to be very pessimistic. At the same time, it's very, very difficult to put a number on in it. But we stay committed to the long-term guidance we have given. 2 years ago, when I took over this role, I said, look, we want to improve our margin on a 5-year basis from average 10% to 15%. And I think last year we ended up at 12.8%. So we're on that path on a weighted margin. So long-term goals are intact. We said we want to double our revenue in 5 years. We want to improve our margin on 500 basis points. So we stay committed to that.
Right. And as I understand, you've actually been among the first companies in the industry to take price hikes. How has that improved realizations for you? Or is there a risk of losing market share if competitors hold prices while demand remains soft? This is because I want to know if this is going to help your margins going on in this current year, or if this is going to spill over in the next year. Just your outlook on margins regarding to your price hikes.
So when we did take a price increase in the month of February after war started, I must admit that first 3 4 months there was no acceptance because there was no demand in the market. Really, April is farmers are harvesting rabi crop. It's May when they start planting their crop, and when product moves, you start realizing prices are moving. So I say that yes, prices have started moving up in the market, and I mean cost pressure is on everybody else. We are in inflationary market. People costs will go up, and crude prices go up. Petroleum, diesel prices go up, transportation cost goes up. So I think so far I would say we have been able to take increased price depending the product and category from low single digit to mid single digit. A lot of it is volume, and we want to strike a fine balance. At the end of the day, choice would be that you want to be left with the inventory, or you want to really optimize your market share. So we were trying to find a fine balance. We continue to stay in touch with on a regular basis our field team, distributors, retailers, to really see what is happening on the ground and make swift decisions.
Understood. That sounds good. Dr. Shukla, thank you so much for your time today. Good to be speaking with you, and good luck for the rest of the quarters for this financial year. Looking forward to your launches as well. Thank you so much for your time.
Thank you very much.